Happy Friday, everybody. It is Jim Malone here, coming to you live on Dell's Trading Floor. Well, the market is kind of, it's pulling back, and it started out very nicely, but it seems as if it's pulled back a little bit. So it's a very tough market to trade. Um, you know, we did have some interesting. There was an interesting event this morning that I tried to take advantage of and hopefully get it out there to everybody, and that is in mode. INMD announced a 2-for-1 stock split, and in I've done a lot of back testing on this, but a 2-for-1 spot, a stock split typically will cause a stock to run up into the split. Now, the split was announced for the 30th of September, so this might be a good opportunity. What I did is I put together a bull put spread, and then I put it out there for everyone. I also have been adding to my position in Palantir, and of course, if you watched yesterday, you know that I was moving into Palantir, and it's looking very very good. So I do think that we have crossed the Rubicon, as it were, and hopefully we're going to be moving up with Palantir, which we'll see. Overall, though, the market has kind of been pulling back. I mean, Apple's weak, and it's a tough one to trade. I'll be honest with you, it's a tough one to trade, and but you do the best you can. So basically, what's going on right now is that the Dow Jones is basically dipped. The White House is doing everything it can to shoot itself in the foot. Just amazing. And it looks as if there's some recession fears. I mean, they're definitely out there. And we've been moving down. So just the long and the short of it, we're still in a confirmed uptrend though. So it's not time to totally get out. You know, totally get out of the market. But it's been tough to trade. I mean, I'm fairly in cash. I've been trying to find homes for the cash. Some of the things that I've bought have faded a little bit. I mean, Starbuck Carriers has pulled back heavily today. I'm still in it. It's very volatile, tough one to trade. Just a difficult market to trade overall, but hang in there because October is coming. September, usually is just a tough month to trade. It's just the tradition in the stock market is it going back, 50 years. It's September's tend to be very choppy. Just kind of wanted to give you an update here. This is taken a few minutes ago. The S&P 500 is down, almost a percent, not quite. Dow Jones is faring a little bit better, only down about a 0.5%, and the Nasdaq, of course, is bearing the brunt of everything because, of course, that's where the growth stocks live, and that's many of the stocks that I trade, of course, are growth stocks. So that is definitely an issue. Nasdaq is down just about 1%, but we're still, and the critical thing with the Nasdaq is that we're still at 15,000, which is tremendous. So as long as we can kind of stay above about 1450, I figure we should be okay. We probably won't slip into a market trend under pressure. But currently, we are still in a confirmed uptrend. So that indeed is a very good thing. Just kind of want to show you a stock that I did buy today. It's in mode, and I talked about that just a little bit earlier. And with in mode, basically what I'm talking about here is that this is the 2-for-1 split. This is the reason why I'm interested in mode. Not only did I buy the shares, but I also hopefully put up for everybody a bull put spread. Now, if you want to take a look at this, it's really easy to do. It's really easy to do. All you have to do is just go to www.dallastradingfloor.com. So that's where you can see this spread. Just it'll let you go down there and then just punch on the button that says in mode. And then put your name and first and last name and an email address in there, and I'll definitely show you exactly how I'm going to trade this, how I'm trading this one. So that's a good potential spread there for you on in mode. So So that's what I've been buying today. Um, but here's the stock of the day. Now, I don't own this one. This is Chipotle. This, by the way, comes from, the usual suspect, the Investor Business Daily. But this one has rebounded very, very smartly off of the 40-day moving average. So this might be an opportunity. Now, it's a very expensive stock, at 19.16 a share, but I'm going to try to construct a spread trade that makes it a little bit more affordable to play this one. This has absolutely been a long-term leader, and it just keeps doing better and better. So this is just a long-term leader. Now, what'll happen? I don't know, but maybe they're going to split the stock. I don't have any information on that right now, but I would think that, with a stock at this price, you'd kind of want to get it a little bit more down to bite-sized pieces. I remember just recently when TTD, that's the trade desk, split 10 for 1. I don't know if that's going to happen with Chipotle, but this is a potential buy on a pullback. So, if maybe you can only do one or two or three shares, this might not be a bad one. It's just looking very, very good, and it's bounced off smartly off that 40-day line. That's sometimes the only time you can buy some of these really, really strong stocks like Chipotle, CMG. This is currently what I have in my portfolio. And as you can see, there's a lot of red there. I would like to see more green. I do have two green spots, but mostly a red. I'm off on ST Micro. I lightened up on the position on this one. I sold out at a profit on, and I did buy back in. So I sold about 2/3 of my shares of ST. I did pick up a little bit of profit there. But currently I'm down. Currently this is down. Copart, I don't know what's going on here, but it's down $8 with going up in volume. So for some reason, people don't like used auto parts today. I don't know why. But we'll see what happens. Devon's down a little bit. This is kind of expected. It's kind of bouncing around there. Macy's is down. I did add to my shares of Palantir, and that one is up. And of course, we went over that on the show yesterday. This one is just looking very, very strong. It looks like finally, because this is an IPO stock, it's finally come through a basing period, and I do think that we're gonna move higher on this one. Down on Robert Half, down on Nvidia, down on Starbuck Carriers. We talked about that one earlier. Not down quite as much. It went way down and then it came back up, down, but down significantly. 5% is a lot on heavy volume. So there you go. Down on Top Build, down on the Spider for the Energy Select. I'm also down on Goldman Sachs. Now I am up on. We are up on N mode for today, INMD, and this, of course, they announced this morning that they're going to be splitting 2 for 1, and that the day of that split is going to be September 30th. So it's coming up pretty quick. Not a whole lot of time on this one. They announced, generally speaking, this is a pretty tight, it's a pretty small amount of time before their split. Typically, they'll give about a month, but we can definitely take advantage of that probably. Also down on the QQQ, I hold the QQQ in accounts where I'm going to need the money in less than 60, less for 90 to 180 days. I hold my cash reserves in the QQQ. These are just basically for taxes purposes and that kind of thing, but I do have the Qs as well. So basically, I want to show you the option play that I did today, and that is the bull put spread on N mode. And basically, if you want to see that, it's very easy to do. Just jump on over to www.dallas@tradingfloor.com, and there's a little menu there, and it's pretty easy to work. It's kind of doggy piggy bunny. It's not a very fancy website, but it's basically getting on the action trade alerts, which we do send out, and I think we're probably going to do one. I'm hoping to do one under $10 highly rated stocks this evening, depending on what time what time I get to that. We're gonna probably do one of those. That's only available to the people that are on the free action trade alert. So please get on that if you want to see that. And of course, that's all free. We do also have the Discord service, which is also we start at the day. At the beginning of the day, and we go all through the day on that one. So that's also available. You can also sign up for that as well. That one is a there's a cost on that one. With this spread, it's super easy. This is just you can take a look at the deck for free. Just go to www Dallas Trading Floor. So I've gone through a lot of stuff here. So basically, of course, we broadcast all the time on YouTube. So one of the things is, of course, I always, and I probably I need to have a more exciting one than I've got. But please like us if you're watching us on YouTube. Please hit that like button. I really appreciate it. And also, if you could subscribe, that would be great too, because that helps with a lot of other stuff. So, without further ado, we want to get into your questions, and let's see if looking at TikTok here, what do we have in terms of that? Oh, somebody is looking at B. Oh, BBIG. Is that right? BBIG. I don't. That's an interesting one. I don't know. I don't know this stock offhand, but hopefully I can pull that up for you on the screen and take a look at it. BBIG. Yeah. Okay. This is sort of in the penny stock realm here. We do quite a bit of, and typically below $10, they're going to be a lot more volatile. So you got to be a little bit more careful when you're going below $10. But let's take a look at this one, just to see kind of see what's headed on here. And that is, well, somebody has asked me, would you like to go live? Okay, I I guess I missed that one. Sorry about that. I guess I missed that one. But this is Venco Ventures, and it's in the toy space, which it sounds pretty good to me. But let's look at relative strength is 99, but it is declining there a little bit. So let's kind of let's first of all start at the weekly chart. Wow, this one is super volatile. That is this one is super volatile. So tough to possibly, looking at there's a lot of there's some action here. Let's kind of look at the checklist on this one. Yeah, you know what? On this one, I just think we got to be a little bit careful on this one. This just doesn't really look very appealing to me. So here's what I would say about Venco Ventures BBIG. Not only is it thin, but I wouldn't buy this one. Um, I just wouldn't buy BBIG just based on the criteria that I'm looking at. I just don't think it's going to give you the kind of thing that you want. So don't I wouldn't buy this one. I think that it's possibly going to give you heartache. Even though you might be able to make a little bit of money on this one, I just think that you got to be careful. Here's some red flags that I kind of want to show you. The last earnings on this, and this is a fundamental analysis, not technical analysis, but the last earnings they were down 48%. So that's not what we want to see. They're losing money. Their cash flow is negative, and they're really not in an area that's being um, heavily acquired. I mean, it's okay. Toys and Leisure is not bad. It's 49 out of 197 in terms of position in the market, but I think you just probably got to take a pass on it. I just don't think it's going to be very fruitful for that one. So that's kind of my take on it. Let's look at TMO. Okay, so, all right. TMO. Okay, let's look at that one. Thermos. Yeah, this is a great stock. You have picked one of probably one of the great stocks out there. Thermo Fisher Scientific. It's kind of expensive, but boy oh boy, this one has always come through. Just want to kind of show you the fundamentals on this one. Any stock that can go up 20% in sales every quarter on a regular basis, like Thermo Fisher can, that's a pretty elite group there. And I think yeah, I think that definitely this is looking good. This might make a good options play. Unfortunately, I wouldn't buy it right at this level. Why? Well, it there was a buy point on it, a very good buy point right here at 526, but unfortunately, we're in a situation now where we can't really buy it because it's extended above above that buy point, and that's unfortunate because this is a great stock. Just kind of look at this checklist. This is a 100% checklist. Yeah, this is a very, very good stock. Unfortunately, with this one, I think what you're going to have to do on this one is, it's just wait a little bit. I mean, like what it is, I pulled it back there, but if you look at the long-term history of this on the weekly chart, it's just look at that. It's just solidly up for the whole, for just a very long time, all the way back here in 2017. It just continued to move on up. Now, it looks like it's retaking its slope. There was a lot of action on it, and everything is looking very, very good on this. Unfortunately, though, and this is kind of unfortunate, it is extended, so we don't want to buy them typically when they're extended. It's just we just don't want to do it because that can be, you can get the right stock, and if it's extended, boy, it could be, it could be problematic. Um, but all in all, just looking like a very, very good stock there. So here's what I would do with this one. I think I probably would not buy it at this level. See if it pulls back a little bit, possibly to the 40-day line. That would be a good thing if it did move back to that 40-day line. That would be very, very helpful if it did. So right now, I just think you got to be a little bit more picky in terms of where you're going on that. So basically looking at this, look at that. This is the daily chart, and this is really the one that I think you really need to take a look at. We're way, way above the 10-day line. So if you bought it here, this would be a little bit of problematic because here's the thing: you don't want to typically buy more than about 3% above that little that little pink line, and that just that because it will correct down. So basically, what we're looking at is if it can pull down, there may be a second way, if it could pull down possibly to 580, then that might be a place that you want to possibly look for getting in. But right now, it's more than 5% above the 10-day moving average, and it's above the buy point. So it's just extended. So here's what I would do with this. This is a great stock. This is a great choice of stocks. But I think what you've got to do on this one is, you just have to watch list this one and wait for a pullback to the 10-day line. Um, stock is extended. That's kind of my take on it. You want to watch this one really because it's a good stock. Thermo Fisher is a quality stock, but at this point, I think you're buying it. If you buy it here, it's too extended. Let's see if it corrects back within 5% of that line there. Basically, that number where the 10-day line is right now is at 369. Okay, and if you can get it within 10% of that, then you could possibly do a small, like maybe half a position, but I wouldn't buy it here. It is extended. So, but it's a great question. It's a great stock, and it's sometimes so tough to get those as they move. As they move like that, it's just sometimes they just get away from you. But it's a great stock, and thank you, RRT. Appreciate it. GEVO. It's like a GEVO. GEV0, not zero. Oh, and okay, okay. So this is sort of a ag play. Interesting, interesting. Not a terribly expensive stock, and not it's in the chemicals area, which has been getting some love as of late. I mean, Chemical Specialties, 48 out of 197. They basically, okay. So they manufacture. Okay, so from feedstock. So this is basically kind of, I guess, a sort of an energy play. I'm not sure about this one. We've got a strong relative strength. This area has been improving, definitely. But I don't know. I'm still not sold on it. 55%. I just think that that's a little bit low. Let's take a look at this particular area because this might give us some leading stocks that we could look at. Now, obviously, the number one is probably the big one probably is WR Grace. I don't know if that's buyable. Yeah, look at that. It is just getting this one's getting ready to pop. By the way, this is getting very ready. WR Grace. This is a much larger company, so this one's looking like it possibly may pop. The industrial sector has just been doing very very well as of late. So it's kind of that mixed bag that we're looking at. So in terms of this one that that's the one I would kind of recommend. Let's see if I can see it a little bit better. Okay, so this is in the industrial chemicals space, and this one 3 months ago this was 88. It's improving, so there's definitely movement. There's money movement into this particular into this particular group, and that's kind of what I'm looking at here. As I'm looking at the group on this one, so GEVO. Let's kind of see how it ranks here. That's the important thing. So I'm looking at it. Doesn't look like it's one of the top stocks, unfortunately. Linde, of course, this is the liquid air people and air products. These are the two biggies. Henkel, this is a soap maker. It's amazing. I haven't really, but this one just doesn't seem to. So here's the thing with GECO. I think I would avoid it. That would be my take on it. I probably would avoid. Um, I probably would avoid a GECO, but it's interesting. It's a very interesting area. Um, but I think of the week it's just too weak of too weak of a it's too weak of a stock. But if you're interested in the particular area, then you might possibly look at it. But I can't see it. It's under $10. Um, I can't see this one as being a particularly good one to go with. So I would pass on this one. I would just I pass. I mean, that's that simple. So pass. Okay, so let's go to the next question. Thank you very much for that. Let's see. Okay, okay, interesting. This is for Mark, and I hope everything's great in Rhode Island as we speak. This, of course, is Virgin Galactic. This is a very tough stock to trade because as you can see, I've had a lot of notations on it. I just think this one, you know, I don't believe that there's a buy point on this one. I really don't believe it. I don't like it because for a lot of reasons, but let's kind of clean that up a little bit so I can let's sort of clean that chart up a little bit. Let's see if I can move this down a little bit. There we go. Okay, so basically, um, what's going on here is that we have fallen. As you can see, we this is a very spiky stock. The last true buy point was way back here in December. It was about 35.82. Then we moved up, of course, on expectation. Then we've consolidated. We had another sort of a potential breakout at 57.51. Now we're consolidated again. So I just can't see it. I'm not really going to be very interested until it gets above that 50-day moving average. I'm just not going to do it. It's got a 33 checklist. I just can't be excited about this one, Mark. Unfortunately, I mean, I would like I would like to be excited about it, but I can't be. So I really don't see a buy point on this one. You could possibly set an alert at the 50-day at the 200-day line. let's see if I can look to see if there's a potential for a reversal possibly. If you did draw the reversal line, it would go something like that. So you could say that this is a reversal, but I can't really I can't really get on board with that. If you'll notice on this chart, I don't know if you can see it. Let's see if we can zoom. This is what they call the death cross. Whenever the 40-day line moves below the 200-day line here, I don't know if you can really see that. Let me see if I can zoom in a little bit on that so you can see it. Okay, there we go. Okay, do you see how? And I'm going to kind of try to see if I can put my pen on it. Do you see that action? You've got the 40-day line that dives below that 200-day line. That's called the death cross. And even though today it's moved up, that trend is not what you want to see. It's going to fade. It's looking like it's going to fade with a relative strength of 16. So I don't, it's not an inverse head and shoulders. If anything, it's a head and shoulders. If anything, this is a head and shoulders and not an inverse head and shoulders. So I don't see a buy point here. Unless this thing turns up, I just wouldn't be in it. Possibly you could do a bear spread on this one, but I wouldn't even do it on this one because this really trades kind of outside of what I consider reality because it doesn't really have any earnings. The fundamentals on this one just aren't there. So I would avoid it. I would avoid it. I wouldn't buy this one. I think this is going to go lower. And I don't like to be. I do have a bear trade on 3M right now with the spread, but typically speaking, I'm very careful in a market that's in a confirmed uptrend to go against the trend. So right now with Virgin Galactic, I wouldn't be interested in buying this one. And but that's what I see. So that's what I see on that. So, but I appreciate that too. Yeah, I mean, some people have done very, very well. So, but it's not my cup of tea. I probably would. I would probably um, not enter a trade on SPCE right now. Just doesn't look really, really good. All right, let's look at Neo. And Neo has been, it's been struggling. Neo, of course, is it's a Chinese stock, and there's been a lot of issues with the Chinese stocks in that the government is they kind of want their money back. Sort of the deal. I don't know if you saw that. I saw a little video this morning where they're imploding. They're going to have the Chinese are getting ready to have a very big meltdown in their property sector. There's just a lot of people. They built a lot of things, and a lot of people invested in them, and now of course they can't rent them, and so in some of the cities they're actually blowing up unfinished tower blocks. So the very shortly China is going to be in a situation where a lot of this money that was going into things like Neo and stuff like that, the Chinese investment is going to get called out. So my impression of Neo, I mean, it's still I think electric vehicles are a great thing, great way to go. Neo is importing their products into Europe, which is indeed a good thing for them. But I just don't like this chart. For they say buy on fundamentals and technicals. I kind of like the fundamentals with the EV business, but I don't like these technicals at all. It's trading below the reversal line. It's trading below the 200-day line. It's trading below the 40-day line, 21-day line, and to top it off, the 10-day line. So the overall trend on Neo right now, unfortunately, is down, and I just don't like to buy stocks that are moving down. I like to buy as stocks are going up and then possibly sell them into strength. That's what I like to do. So unfortunately, I think what we've with this situation, I think you need to pass on this one. I don't even think this is a watch list right now. Boy, I've been really negative, and I'm not a negative guy. I just think that there's better places, there's better bets that are going to do better than this area. Another thing that you've got to be really concerned about is that automobile manufacturers last year were number one. Okay, they were the number one area in the stock market. Primarily the performance of Tesla was my best stock last year. But right now, Automobile manufacturers are 107 out of 197. So it's mediocre. You want to buy stocks in the area where the bulk of the capital is moving in the market. And unfortunately, that's not automobile manufacturers. And unfortunately, it's especially not NEO. So I would just be super careful on NEO. I just would. Thanks, Polly. Let's look at FANG. Oh, okay. This is a cool one. FANG, of course, is not the FANG stocks. It's actually called Diamondback. And what it is, of course, is an oil company. And that area, as of late, has been doing well. Now, not so much today, because I got skin today on this, but as of late, FANG, let's put that in there correctly, FANG. Okay, there we go. Diamondback Energy. All right. So that is this is the chart for Diamondback. And what's nice about this one, look at that. Look at now this one. This should pique your attention. I'm looking here at the weekly chart, and that's really the place that I start looking for kind of for action. The oil and gas U.S. exploration is doing very well. It's 37 out of 197, so it's holding up. The investment has been coming into these stocks, and last quarter their sales were up 296%. Now it's largely due to the price of oil, but the price of oil as of late has been going up. We have a lot of inflation in the market. And one of the things that does extremely well when there's a lot of inflation in the market, of course, guess what? Is oil. Is oil. So this one looks very, very nice. I mean, it conclusively bounced off the 200-day line. I love seeing it get strength there. We had a very big buying today. This is the largest volume since the last base, and the last base was basically in June. So this is looking very good. It's nicely consolidating on the handle. So let's go to the daily chart and let's see if we can find a place that we can buy it. Now, one of the things that can always be really good is if you have this cup with handle formation, one of the best places to buy it is when it reverses in the handle. And I'm going to kind of put something in there, and you can see, there we go. That's not quite right. Let me see if I can go right from the top, which is the correct way to do it. Yeah, there we go. Okay, so what I'm going to do is I'm going to set an alert on that trend line. So we're definitely above the trend. So it definitely is moving higher. There's no question about it. Now, we're not quite to the buy point. The buy point on this one is 87.59. It's a little bit choppy, but 87.59. So we're about $5 away. But the relative strength is very good at 92. We have nice buying action in there, and everything is kind of lining up for this. So, you know what? I think that I wouldn't go in with a full position, but it's got an 89 checklist. So, I might consider a half position. This is all kind of lining up very, very nicely. So, I would consider buying a one half position. And what do I mean by one half position? Well, here's what I mean. If you have a portfolio, let's say the portfolio is worth $8,000, because those I like the round numbers. They're easy for me to do. Well, think of your portfolio kind of like a pizza, okay? And there's 8 slices of pizza. Well, sometimes on the big ones there's 16, but on the personal size ones there's 8 slices of pizza. So think of a full position as being one pizza slice. So with this one, with Diamondback, we're below the buy point. The correct buy point on this one is 87.59, but it's at a very nice upward trend. It's moved through the reversal line. It's above the 200-day moving average. It's above the 40-day moving average, and there's nice volume coming into the issue. So here's the thing: you could definitely buy FANG at this level, but I wouldn't buy a full position. I would buy a half a position. So basically, a half a slice of pizza, or about a 16th of the value of your portfolio. So if your portfolio would be worth, let's say, $8,000, you would want to buy the number of shares that would enable you to buy basically $500 worth of the stock. So I think you could definitely move into FANG right now, and I think it would be a very good. It possibly would be a very good stock. It's looking good. I'm not currently in it because I'm in several other I'm in several other oils, but I do like this area right now. This is an inflation. People say, well, when you see inflation, you should buy gold. Well, gold is off. Gold is off right now. But you know what? What does respond very well to inflation are the prices of oil, interestingly enough, because that's what everyone has to use. It's a base. It, even with all the talk, with trying to get off oil for the last 30 years, oil is still king. I mean, it's in everything, in cars and heating. And, we're going to have probably a natural gas shortage this winter. It's looking that way in the Northeast. And, you know, that may be they may be attributing to the run up in the domestic prices. Now, one of the things about the E&Ps in this group, the oil and gas U.S. exploration E&Ps, is that we get all of our natural gas domestically. So this group, potentially is going to do very well selling natural gas this winter. So I definitely like Fang. I'm not in it. I'm in. But I have other oil companies as well. And they kind of trade the similar. And I also have the XEP. I want to kind of show you that one. That if you don't want to, you know, buy the XLP is the spider. That's there we go. No, it's consumer sales. I'm sorry, XLE. Excuse me. I put XLP in there. That's also a good one. But the Energy Select Spider allows you to basically get a weighted average of all of the oils, and that can be good. Now, as you can see, we had this downward trend, but as you can see, basically about here, and basically last week, we're starting to see a bounce off the 200-day line. That's very similar to the way that Fang itself is trading. So this one, if you don't want to buy just any particular stock, you just want to buy a whole bunch of them, this might be an alternative to the Energy Select Spider SPDR. These are from the symbol on it is the XLE. So that might be a way to play it. It's down a little bit today. I definitely I have it. It's down a little bit today, but I think over the next few months it ought to do fairly well. So we'll see. We'll see what happens. All right, question on Nvidia, and of course everybody knows that I have Nvidia at least for right now, and I did trim my one of my positions in the chips, and of course I had uh, I had STM. I still have it. I trimmed two thirds. I sold 2/3 of my position. I still have 1/3 of the position in STM, and then of course I have Nvidia, and I haven't been adding to the position, but it just seems to it has this cup with handle. It's off a little bit today. It's off a little bit in after hours, but I definitely see that it's still consolidating in here. Um, so we'll see. This is sort of a weird. This is a high handle. Typically it's a cup with a handle, but it's still a high handle on this one. So I think we'll probably see some support at the 21-day line. I have I have my alert there. I do think we're going to see some support at the 21-day line. Currently, that 21-day line is let's just put it on. It's about at 219. So we're right at the top, basically at the 21-day line. Now we'll see if it will get some support there. I'm hoping it will. I'm going to look at the 30-minute chart to see. Yeah, a little bit of fade. But remember, this is a triple witching day, so it's not going to be. This is not going to be the greatest day in the world for stocks because, frankly, it's triple witching day. A lot of options are expired. So there's a lot of selling when that happens. That's always a down day. And I think on Monday, hopefully, we'll get some support for Nvidia, basically right there at about 220. That would be excellent if we did. And I think there's a high likelihood of that happening. Now let's go back to TikTok. Thank you so much. Is Nvidia a buy? Well, it's sort of that's a really good question. Thank you for that. Answering your question directly. I think that Nvidia is still a great stock, but I want to see this was the options expiration date. So there's several events that you kind of have to always be careful with. Quadruple witching days like we had today, and earnings. So we don't want to typically buy into either of those events if we have a new position. So here's what I would do. I would wait for Monday to see how it trades, see if we get support at 220. If we get support at 220 on Nvidia, then I think that, even though it's extended, I do like this stock a lot. Even though it's extended, I do like it. I think that we're going to see some support here at the 21-day line, but I don't think you want to buy it. Really, you want to look to see how it trades on Monday, on the close of Monday. That's really going to be where you're going to want to see it. I think it still remains very strong. It's got a 93 relative strength, but let's look at the checklist to see if there's any changes. It's 100% on the checklist. So I'm pretty confident with NVIDIA. This is a long-term leader. We have come through this consolidation. We're now in this, what I consider, high handle. And, if we get a bounce here at the 21-day line, which is 220, then I think it might be up to about 250. I think it could be back off to the races. So, what would I do with Nvidia? I might consider buying it. I wouldn't buy a full position. It is slightly extended. I mean, I don't like to buy them slightly extended. It's a little bit out of the buy zone, but I still think that if we can see a very nice some strength at 220, that would be great. So I would wait until tomorrow. I mean, not until tomorrow. I wait until Monday. How Nvidia closes on Monday. If it can hold the 220, then I think you might want to start coming into it. Wouldn't come into it with a full position, maybe a half position if it was a new buy. All right, thanks, Stevie. Thank you. If you have two covered calls for 2 weeks out, can you still utilize the underlying security to trade? Well, okay. Oh, yeah, you're talking about covered call. Yeah. Yes, absolutely, you can. Or you could possibly roll the. There's a lot of things you could do with the covered calls. Um, you don't always have to have covered calls in there. Now, the thing is, when you sell the underlying stock, you're naked in that. So I probably wouldn't want to do that. I would probably want to I would probably want to limit my risk by doing something like possibly moving from a covered call situation into a spread situation, because a spread is going to be a limited risk situation. Now, with a covered call, essentially it's a limited risk situation, but when you just have a naked call, that could be, calls are not, it's not as bad as a put, but with a call, having a naked call, the worst thing, of course, that can happen is, well, the worst thing that can happen is that it expires worthless and you lose your premium. So that's not necessarily a bad thing. Also, you might be able to roll that out, maybe out a little bit as well. So I really appreciate the question. Unfortunately, I don't have enough time to get into exactly how to roll, but I'm going to try to put out some more information for everybody out there. It's such an important thing to do when you're dealing with options, is knowing how to roll out and roll up and that kind of thing. So I really appreciate that question. Thank you. Let's look at Path. Path. All right, PATH. There we go. And that's okay. Yeah, yeah. This is a very cool one. I was in this one as an IPO. Of course, this is an IPO, and it's really been out only about 5 months. And unfortunately, and this so often happens with this so often happens with with IPOs. It came out at 56. Now, unless you were an insider or part of the people that invest in these things, hedge funds, you didn't get 58. And so basically, it came out of the gate. It runs right up here, basically all the way up to the buy point, all the way up to 83.40, and then all the people, the insiders, they're starting to sell out. So it forms this U. This is a very common pattern for IPOs. It'll come out of the gate, it'll move up, and then eventually the bids and the asks will come into equilibrium, and then it will start this kind of cupping action there. And then if it's strong, it'll move above that buy point. That's the buy point here. The first time you really want to buy a stock like this is, for this one would have been back at about April, about May, I would say May 28th or so, a little bit before that. That's going to be the first time that you want to buy it. Why? Because you don't want to, when it comes out of the gate, you don't want to be in it, and then you just want to let it make the cup, and then when it comes out, move it up. Now, here's the problem with buying these. You see, there was a lot of excitement on this. It moved up very nicely, and then all of a sudden, boom, 4 days later, it dropped out of the sky. And this is why it's absolutely critical when you're trading IPOs to have extremely tight stops, market stops, and not trailing stops, because these things tend to drop. Well, it dropped, and then it lost the mojo, and then unfortunately, it's just been moving down ever since. So, long story short, long story short on this one, I would not be a buyer on this one because it needs to reverse, and it needs to reverse higher. So right now it needs seasoning. It's like that. This one may do well in the future, but right now it needs to a little bit of seasoning, because you see the trend on this one is down, and that's unfortunate. Because I think it's a good company. I think it has a lot of great fundamental things, but technically, I wouldn't buy this one. Now, look, also, you can see that there's been a lot of selling here as of late, so something is amiss. Now, normally you would say, well, Jim, you told me just before that if the stock goes up, sales are up 20% a quarter, man, it's a good stock. I still think it's a good stock. I just don't think it's the right time to buy it. But here's the thing: look at the sales are going up, but all of a sudden, boom, the profits are down. I don't know why the profits are down here, but they're still in a loss mode. It's an IPO stock, and it just needs time. So what you need to do with this one, and this is so hard. This is sort of my default saying, but I just think that you have to put this one on, basically on the watch list. So, put on an IPO, put on the watch list. I think that's really what you got. I think that's really what you got to do here. You just have to put this one on the watch list and kind of wait, because this just doesn't have the mojo. Right, yeah. It needs to come above it's higher. It needs to come up to the buy point, which on this one currently, let me see if I can get that in there. On the IPO, this is 83.40. So I wouldn't buy this below 83.40, and I wouldn't buy it in a downward trend either. So I think you just gotta have to wait on you just gotta have to wait on that one, unfortunately. But it's a good stock. It's a good, fundamentally it's a good company. So, but I just wouldn't buy it. So right now I have to be careful. It's great. It's a great idea, but I wouldn't buy it right now. Did you cancel the Moderna bull put spread today? No, I didn't. I probably should have. I was making other slides. Let's kind of take a look to see kind of how that one is doing or not doing. We'll take a look on that really quickly. And I was going to put this up for everyone, but let's see if I can get the Moderna spread here. So, all right, and then I'm going to look at the Moderna mRNA. Here we go. So currently today, Moderna is selling for 430. Oops, 429. There we go. So this is the price for Moderna. So let me get back to see if I can share the screen on this one. And this is for the Moderna. This is the original slide deck that we had for Moderna. So I'm going to go down here to kind of the Moderna thing, and today, and I'm gonna this isn't this isn't the price today, but today what happened with Moderna is that it closed. See if I can put that in there. Yeah, Moderna closed at 4:30.05. So based on that, we're going to have to adjust this way down here. So I didn't close this one, but if you look at that, I'm going to have to move the expected value of this. So the expected value went from kind of a positive 18 to that to basically you know oops, see if I can see if I can move this all at once. If I can, trying to give me a grab handle. Oh no, it didn't. Well, anyways, so and I'll move this in a second. But basically, what the deal is that we have to kind of adjust our expected value for the Moderna trade, and currently we're underwater about 60. But I'm still pretty confident, and I'll tell you why. Because I do think that we're going to get some support, and then move this way. Now, if this continues to keep going down, like gets down to 395 or something like that, then we're going to have to adjust it. But right now, I'm not closing this because we got a little bit of motion down, but that's not necessarily the end of the world. Now, let's look at the actual chart for Moderna. So this will give us this will kind of give us a look, see, kind of a looking glass to look out into the future, to see kind of how Moderna might trade. And I'm going to kind of look at this. I'm going to kind of zoom in here on. I'm going to go to the daily chart, and I'm going to kind of zoom in a little bit. Yeah. Okay. So I do think what's happened is, and if you look at this chart action, you can see that it pulled back to the 21-day line here. Okay. But it bounced because you see that little notch there, that kind of notch on the candlestick. It went all the way down today. It went as low as 411, but it bounced on that 21-day line, and it bounced up to the 10-day line. So actually, that's not necessarily bad action. That's it's not great action, but it's not bad action. So it got support at the 10-day line. So right now, I am still pretty pleased with the way it's trading now, because nothing is going to go up every day, but I'm still pretty pleased with the way this is trading based on the chart. I think we got a nice bounce at the 21-day line, and now it hopefully can continue its movement upwards. If it does, then we can, then it hopefully will move higher. So I'm gonna go back to the kind of the original chart that we had here for this trade, and see if I can pull that up. Oh, there we go. And see if I can pull that up. And so basically, what I'm kind of expecting for this is, you know, if we continue to move up, we should be okay in this trade. So I'm not gonna close this one right now. I'm not gonna close this on the trade. I'm gonna kind of keep this one open, and yeah, I'm gonna kind of keep this one open, and because I do think that we got nice support here. We went all the way down to 411. See, so we went all the way down here, but we got the bounce, and the bounce came right back up here. So if it starts now bouncing at this level, it should move into the green zone, hopefully by the end of September. That would be the ideal. So long story short, I am keeping the Moderna trade open, at least for right now. But I'll tell you if I do change, and of course if you're a member of the Discord room, I try to put up all my trades sort of as they happen, sort of as they're happening out there. Okay, so thank you very, very, very much for that. Okay, let's look at for MB. Let's look at the Spider and Apple. Apple was just under a tremendous amount of pressure today. So let's look at Apple first and kind of see. It's that 150 level. It just can't seem to hang on to it. Unfortunately, I got stopped out of. Oops, that's my Moderna stuff. That's my Moderna stuff. So let me go to the right chart. That would help, wouldn't it? Okay, let's go to the right chart, and that's going to be the Apple chart. There we go. There's the Apple chart. All right. Here's the thing about Apple. Um, you know, we needed. It seems like we have a lot of resistance right here at 150 for some reason. That seems to be the level. And it was not able to hold on to the 40-day line. Now, is it going to move lower? Probably. It's probably going to, unfortunately, based on what I'm seeing on this chart, I think that Apple potentially could move as low as 137 before it gets support. But I don't think it necessarily is going to move that low, but it could move that low. Now, but I think it's more likely to see Apple getting support right about that level there. I'm going to put an alert on that at 7206. Okay, that I'm not at. I'm sorry, at no, that's not right. It's we need to give us the. There we go. All right. So I'm going to set an alert on that line. There we go. Yeah, there we go. There is that line. Okay, so that's kind of the line in the sand that I'm looking at, and I kind of want to see sort of where that is. That's where I think it's going to get support based on this chart. I think it's going to get support about 141.80. That's kind of where I think it is. So right now, unfortunately, I don't like saying this, but I think it's going to pull back, and I think that if you're looking at being more than 7% down, consider selling and waiting for it to reverse higher because I'm sure that it will reverse higher, but for right now, I just think that because we moved through that 40-day line, it's very, very possible that we're not going to get support until about 141. And part of the way the reason that leads me to believe that is because if you look at this candle here, you'll see that the wick is all the way down. I mean, it's all the way down. So this closed at the low of the day and it broke support. So I'm not really feeling the love, unfortunately, with Apple. I think it's going to move. I think it's going to move lower, but I think it probably will get support at 141. But you don't want to take that elevator down. I would recommend if you're more than 7% down on this, sell your shares now, and then possibly buy in. Now, of course, if you're up, 100% or something like that from where you bought it, don't touch anything. But if you did a recent buy, if you did a buy above about if you did a buy above about 140, you might want to consider closing your position right now because I do think it's going to pull back. I do think it's going to get some support probably at about 141 or 140. But, unfortunately, I just don't think you want to take that loss. You can always get back in. You can always get back. You can always get back into a stock, so that's never a problem. You can always get back into a stock, but right now, if you're down more than 7% on Apple, I'd consider just closing my position, just because I think it's likely to go a little bit lower before it bounces, and I do think that the bounce probably is about 141. That's what I'm seeing on the charts, anyways. Yeah, nobody can predict the future, at least I can't, but you can kind of get an idea of sort of where things are headed, I think, sometimes. Now, the spider has come down. This isn't actually, everybody thinks that this might be bad action on the spider. I don't think so, because it definitely closed at the low of the day, below the below the 40-day moving average. But remember, this is the quadruple witching day. Okay, so there's going to be a little bit more selling going on, anyways. This is not out of character for the spider. So I think that we may see on Monday, when the week starts again, I think we may see a bounce up here on the spider. On the spider. That's kind of what I'm looking at. It's kind of looking. This is the normal pattern. And it kind of goes boing, 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 boing. Kind of bounces up there. As you can see, it's just been bouncing up as going higher. So this tomorrow. Tomorrow. What am I thinking? Monday. It might be a good day to see how the spider's trading. You might want to buy into the spider on Monday. I also want to kind of look at the Qs. The Nasdaq 100. I have the Qs. This isn't quite looking as nice as the spider. The spider's looking better than this. I have the Qs. Don't have the spider. This one's probably going to pull down a little bit more to that 40-day line before it bounces. But it looks as if I'm pretty sure that at least unless there's a major market correction, I think the spider probably is going to bounce and move higher on Monday or Tuesday. That's kind of what it's looking like to me. But again, it's a base. That's if things can. If we have the momentum as we go. Do you trade currencies? Good question. Not really, not really. And the reason I don't trade currencies, it's just focus. I mean, uh, trading currencies can be a very, very good thing, but the problem with currency pairs in forex, you can make a lot of money in forex, is the fact that it's so manipulated by the governments. I mean, the printing presses on the U.S. dollars has been going full stop. So unless you watch it really closely, you can really get skinned on that. So no, I don't trade currencies. I don't trade currencies. But if I can get this channel big, and please help me by watching, by by liking it. That's always a good thing. By liking it, if I can get if I can get the this channel bigger, I would love to have somebody else that could just do currencies because I think it's excellent. I think it's an excellent place to go, and it's very good. But unfortunately, I don't really cover currencies. You're limited on time on everything. Okay, this is probably going to be the last question because we're right about an hour. CPNG. Let's take a look at CPNG. All right, and that is Kopung. Okay, this is a Korean company. I think this is the one that Bill Gates was buying. I'm a little bit suspicious of him. I think that was right. I don't know. I'm not trying to start remembering. I think I heard that. I don't know. Whatever. I don't like this chart. I'll just looking at this. I don't like this chart. Here's what the first thing I do when I get a stock that I'm unfamiliar with is I open up the chart and I go to the weekly. Okay, go to the weekly chart and I look and I see, well, what direction is this going? Well, this direction, if you were on an airplane, you'd be flying from Seattle to Miami. I don't want to go that way. I want to go from Los Angeles to New York. That's really where I want to go. So this one is retreating, and we don't like them when they're retreating. Also, it has a relative strength of 4. I typically like to buy mine with 80 or better. I like to buy in the top 20% of the market. Unfortunately, this is in the basement. This is in the this 94% of stocks right now in the market are doing better than this one. So I can't get really excited about it. If they did have some very very nice sales increases like that, but they're still losing money. I don't like that. So overall, I just don't think you can buy this one right now. I just right now it's just the fundamentals are just it's just not there. So I wouldn't buy this one. I wouldn't buy this one. But that's not to say that there's not that there's that. Oops, that's a half position. I wouldn't buy this one right now. It doesn't look good. Now, if you want to be in this space, which is the retail internet space, there are some good places to be. And of course, this fell today, so you know, don't totally throw Rotten Tomatoes at me. But Meli, Meli, I still really like this one. This is sort of the Amazon of Latin America. It did pull back a little bit today on the daily chart, and I wouldn't say don't buy. I say buy this one. Um, but this one did pull back a little bit today, but it's still up on the weekly chart. It did this today. This one went this yeah. But you can see it's right at this critical juncture here. I think we're likely to see this one move higher. If you want to be in this internet retail space, which is 77 out of 197, by the way, this is the one I think you want to look at. It's Meli, Mercado Libre. I wish I could speak Spanish. It would be so much easier. But this one's a good one, and I'm looking possibly to do a spread trade on this one. You know, as well. This has a very very long consolidation. This is a cup with a handle, and now we're in the handle phase. Many times, the absolute best time to buy stocks like this is when they have a handle like this and they reverse on the handle, and that would be. And I'm just going to put it in here. That would be a trend line like that. So if we were to set that alert, you see, as it moves above that, we might want to be into that. This is Mercado Libre. This is just if you want to be in the same group. Now, unfortunately, this is an incredibly expensive stock, so sometimes it's probably better to use a spread trade or something like that to get exposure to it. Well, thank you, everybody. Thank you very, very much for taking a look at my little show. Please tell other people. I need subscribers here. I'm so close on TikTok to getting to 100,000. Please tell your friends. Please like me on TikTok. And also, if you want to get on the action trade alerts, and they're free, by the way, you know, it's really easy. Just go to if you're you just go to www.dallastradingfloor.com to get on those. And if you're watching on TikTok, very easy to do. By the way, the whole show with slides and everything is going to be simulcast and will be available right after the show on YouTube. So just click on my profile, scroll down, and the one at the bottom is the show that will you can see the whole show with all the charts, everything I've been talking about. And also you can join the action trade alerts as well. And of course, if you're watching on LinkedIn or you're watching on Facebook or all this, just go to www.dallastradingfloor and we'll get you set up. So until tomorrow, until Monday, everybody, I hope everyone has a great weekend and happy trading.